After a sharp intraday recovery, metals, realty, financials lead the gains while FMCG and utilities lagged. Broader market outperforms.
The Hindenburg research flags issues to suggest that SEBI chief in the Adani matter and cited this as a reason for SEBI inaction. Adani Group stocks end the day in the red but sharply off lows.
Jubilant FoodWorks fires up on delivering growth in a weak environment. Voltas climbs on heady sales in the warm summer, but Balkrishna Industries skids on challenges ahead, and Sun TV feels the heat as ad as well as subscriber numbers dip.
Hello and welcome to this fresh edition of Markets Forward, your go-to show where we get you up to speed with regard to today's trading action, and we also gear you up for tomorrow's session. I'm Nigel D'Souza. Joining me as always, my colleague Surbhi Upadhyay. Hey Surbhi.
Hi Nigel. It was always going to be an interesting Monday, and it surely was. We had our share of volatility, some wobbling, but finally close to the flat line.
Well, that's right. Well, and in the next 30 minutes or so, we'll tell you all that went on in today's trading session, the big news, the key developments of the last trade, the top corporate voices, and the events to track going ahead as well. But let's tell you first what went on in today's trading session. For starters, we had a positive handover from the US markets on Friday, so that was good news. And the Japanese index, which has been, all over the place, that market was shut. So today, in fact, the buy the dip did work, because today, in the first couple of hours, we were down more than 100 points. You bought the dip, that worked. But even if you sold the top of the day, well, that worked as well. We ended more or less flattish, but there was plenty of action. And as you can see, the intraday movement was nearly around 240 points on the Nifty itself. There was a bit of an outperformance, though, and a relatively higher beta did well today. The real estate stocks, well, that did well. So Realty Index was an outperformer with a gain of around 1.3%. And on the metal index, that's been the easy shorting candidate. But when the globe is in a better space, well, that one pops up, and that's precisely what happened in today's session. By the end of it, the advanced decline ratio, well, pretty much even Stevens. At one point of time, they were pretty much apart from each other with way more number of stocks declining than advancing. But at the end of the day, one stock advancing for one stock declining. Should be what else?
Well, in terms of the sectoral breakout today, it was the commodity part of the market that actually did really well. Whether it was the oil and gas space, with ONGC being a big leader, and we'll tell you why as we go along, or the metal side of the market. Real estate as a sector did really well today. So that's where the green was. It's a Nifty Commodities Index, and that's a stock that's going to be in focus. But on the flip side, there was actually weakness on PSU names for a change. Whether you're looking at the PSU Banking Index or if you look at the CPSE Index as well, that's where some money was coming off the table. So that's the sort of the up and the down of it. But for what it's worth, I mean, we got a lot of market commentary through the course of the day as well on the whole Hindenburg saga. And it seems that at least for the time being, the market wants to put it behind and move on, look at earnings, look at global cues and other important triggers which are here and now. Well, we'll discuss all of this as we go along with our experts as well. So here's what the lineup looks like today. We'll start off with all the movers and shakers as usual. Vivek will join in with the day's stock list. Now, the stocks of the day include Voltas, Jubilant FoodWorks, both of them moving higher. Sun TV and Balkrishna tumbled big time on the back of the first quarter numbers. So we do a deep dive and get you all the highlights. Last but not the least, we will dive right into the key market events to watch out for tomorrow. But first, let's go across to Vivek for the movers and shakers. Vivek, over to you.
Well, thank you so much for that. The day started quite in the red, but after that we made quite a bit of a recovery over there. But quite a lot of stocks, especially, part of the broader end of the market that saw quite a bit of movement. First on a list, the top Nifty gainer, ONGC. Some positive news flow coming in. Neo Gas Fields, the company said that they will get a 20% premium to the existing APM gas prices. On the back of that, in the last hour of the session, stock saw an up move. The second stock on the radar is Inox Wind. Strong set of numbers, good management commentary coming, when they spoke to us in the morning, the stock ended at the upper circuit. The third stock on the radar is Voltas. It was a clean beat by the company across all of the segments and beat all of the analyst expectations. And along with that, even the EMP margin business, that also recovered. And on the back of that, over 10% higher. Jubilant FoodWorks, again, the LFL growth coming in at the top end of the expected band. And after that, a couple of brokerages to upgrade the stock ended higher by over 8.5%. Bikaji Foods, this was one particular stock, in the broader end of the markets in the NSE 500, moved out on good volumes today, cooled off a little bit, but still higher by over 5%. On the other hand, some of the stocks that we'll discuss more in depth, Sun TV, quite a significant fall for the stock today. Ad revenue growth disappointed the street, lower by over 10%. Balkrishna Industries, while the results were very good, the muted commentary coming in from the management in terms of muted guidance and also talking about margin pressures on the back of higher natural rubber prices was something that took the stock lower. And lastly, Bharat Dynamics, very muted set of numbers, stocks has quite a bit of sell-off on reasonably high volumes as well.
Okay, all right, Vivek, thanks a lot for that. Well, let's get a guest then onto the show. We invite Mayuresh Joshi of William O'Neill to help us out with some fundamental analysis, and Shilpa Rout of Prabhudas Lilladher. Hi, ladies and gentlemen. Thanks a lot for joining in. Shilpa, you go first. Tell us what was your reading of today's trading action. I'll tell you what, the last few sessions, 5 or 6 sessions, we have gone to 24,350 to 24,450. And from there, we have come off the top. What's your view? The 20 DMA is within striking distance, but it seems we are hitting a bit of a resistance zone. Your take?
Nigel, the range is quite well defined. We have not breached the 23,900 mark on the downside. Neither way, we have, decisively sustained above 24,500. So till we don't see those levels hitting, we will see this range bound or rather the sideways market for some time again now. Same with Bank Nifty. Bank Nifty, the broader range stays in between 49,800 to 51,200. So this is again a very range-bound market. So stock-specific moves are happening, and we should look for opportunities there.
All right, and we'll talk about some of those opportunities as we go along. Shilpa, stay on. Straight away, getting into a lot of the stocks that were in focus today, starting with Voltas. Now, this stock was up 10%. After reporting a solid quarter. First quarter numbers looked really good. Margins rose to 8.6% versus 5.5% on a year-on-year basis. Upasna is here to tell us exactly what's worked so well for the company in the quarter gone by. Upasna.
Thanks so much for that. Voltas reported strong set of numbers in its Q1 FY25 above street estimates. Strong growth was mainly driven by the company's UCP segment, which is nearly 77% of the sales. EMPS segment also recovered sharply this quarter and turned positive. Now coming to revenues first, the revenues stood at 4,921 crores with an uptick of 47% on a YoY basis. EBITDA saw growth of nearly 1.3 times at 424 crore. Leading to a sharp EBITDA margin expansion of 310 basis points at 8.6%. PAT stood at 335 crores with an uptick of nearly about 1.6 times. Now coming to company's key segment, first up is UCP segment, which was the key growth driver. As stated earlier, recorded a strong revenue growth of 51% on a YoY basis, and margins in this segment also expanded by 40 basis points at 8.6%. Company's EMPS segment turned positive and revenue growth was about 40% on a YoY basis and margins turned positive at 7%. And lastly, company's engineering products and services segment saw a revenue growth of about 13%, but margins declined by 100 basis points at 28% on a YoY basis. So all in all, strong set of numbers reported by Voltas in its Q1 FY25.
Okay, all right, got that. Thanks for that. Well, let's stick with earnings and with good ones. Jubilant FoodWorks as well surged away in trade, post a solid showing in the first quarter. Mangalam joins us to run us through a quick analysis on that. Mangalam?
Well, there were 5 major reasons why Jubilant FoodWorks was indeed the stock of the day on the way up. Reason number 1 was their like-for-like growth. That came in at the higher end of street expectations at 3%, led by delivery channel, which was close to around 12%. And this at a time when all the other QSRs, including the likes of Westlife, Pizza Hut, as well as KFC, reported a decline to the tune of 7 to 9 odd percent, made the company stand out. The second reason was even as delivery did well, dine-in, which was lower year on year, actually showed a recovery quarter on quarter, and that told you that maybe the worst is behind when it comes to dine-in as well. The third most important reason is that even the reported numbers were largely in line, if not better than street expectations, right from the standalone top line, which came in at around 1,440 odd crores, margins, EBITDA at around that 280 crores with a net profit closer to that 51 crore mark as well. The fourth important reason, the company continued its expansion in Domino's and non-Domino's franchises as well. So 34 Domino's stores added during this quarter, 8 stores of Popeyes chicken added, along with a few stores of Hong's added as well. That did well. And the fifth most important reason was their non-India business, which is DP Eurasia, including the likes of Domino's Turkey and the cafe brand coffee did extremely well, with anywhere between 7 to 10% sort of like-for-like growth coming in. So these 5 factors made the stock of the day today.
Okay, all right. Thank you very much for that. Mangalam, indeed, Jubilant was quite an appetizing sight as far as the bulls are concerned in the market today. Back to Mayuresh and Shilpa for this. Shilpa, actually, let me come to you first, because this stock, I mean, technically, it's been in the doldrums. It hasn't really performed nearly as well as a lot of the other players in the mid-cap and small-cap arena. What do you think now? Do the charts suggest that there is a bottoming out?
Jubilant FoodWorks, yes, I believe, the stock, the move that we saw today, it has been pending from quite some time now. The stock is now definitely heading towards 720 zones. So on any declines, also, if you find towards 620, I believe that is a very good opportunity, and the stock is definitely moving towards 680 to 720.
Okay, and Mayuresh, just a quick word from you. Jubilant, I mean, the rest of QSRs, I mean, the numbers haven't been hot at all. Are you interested in QSR overall? And if yes, and how does Jubilant stack up?
No, so as a space, it will do well, and it will augur well for the entire industry as a whole. Obviously, the LFL, as Mangalam mentioned, for Jubilant, a higher end of the range, the delivery LFL even better compared to a lot of its peers, except Burger King, who posted a positive LFL. But this is definitely showing signs of recovery. And to that extent, as this recovery process gets entrenched in the coming few quarters as well, earnings should also see some amount of stability. And therefore, I think the bottom line growth with expectations of reasonable volumes holding up for the rest of the calendar year should augur well for Jubilant. Again, as I said in my closing bell remarks as well, I think valuations might be a tad bit on the higher side. But I think if volumes and value probably sustain for Jubilant in the next few quarters as well, with the product innovations they've got and international operations also expected to remain stable, there can be some element of re-rating around the corner, albeit the valuation. So anybody holding should continue.
Got that. All right. Well, we spoke about a couple of winners. Let's speak about a couple of stocks that were losing out, actually. Sun TV. The stock has had a great run in the last 3 months or so, but it missed estimates. The ad revenue declined by 5%. The EBITDA margins as well contracted. Vamakshi is here to break those numbers down for us. Vamakshi, the stock pulled back. The numbers were disappointing.
Well, absolutely a disappointing set coming in from Sun TV. When you look at the revenues, they were down nearly 3%, a 2% miss as far as expectations are concerned. And this dip was largely being led by the advertising revenue, which saw a decline of almost 5%. Subscription revenue too was down 2%, and IPL revenues declined by nearly 3%. EBITDA margins sharply contracted by 433 basis points, came in at 55.4%. This is much lower as compared to what the street was working with. The street was working with an estimate of around 60.3%. Net profit and EBITDA too missed estimates by around 10%. Resultantly, we also have a brokerage note that came in from Motilal Oswal. They went ahead and downgraded the stock to neutral from buy. Target price of 860 per share. They say that prolonged weakness continues in the ad revenue. There is risk around market share loss as well as strong competition from deep-pocketed OTT players. They're expecting revenue and PAT CAGR of almost 3% each from FY24 to 26, which is not much. And they've gone ahead and cut their EBITDA estimates by 10% each for FY25 and 26. So overall, doesn't look like a good set for Sun TV, and as a result, the stock was under pressure today.
Okay, all right, got that. Thank you very much for that, Vamakshi. So, that was another stock that was in sharp focus, and that too on the way down. Let's look at one more stock that kind of trailed because of, again, earnings disappointment that came through. And I'm now referring to Sun TV. The stock skid about 10-odd%. Just kept tumbling down. Balkrishna Industries is the one that's in focus. The management commentary also seemed a little tepid. We've got Sudarshan joining in to give us some more details on why there was so much disappointment with Balkrishna in this quarter. Sudarshan.
So we saw the shares of Balkrishna Industries falling up to 10%, recording biggest fall in last 1 year. And this after company announced earnings, and those earnings were largely in line to estimates or slight beat. But what has spooked the market is the management commentary. commentary. So first, talking about the numbers, revenue has increased 27% and was 5% higher than the estimate. EBITDA has increased 32%. Margin has increased to 24.4% and 23.2% in the same quarter last year. Profit also has increased more than 19%. Volume growth has come in line with estimates at 24%, and companies also looking to add fresh capacity at Bhuj with an investment of rupees 1,300 crore. But what has spooked the market is the management commentary. What did it say? There was softening in demand after Q1, especially demand at end user place. Also, tepid demand environment due to macro challenges that companies facing. And it sees minor sales volume growth in FY25. So after 20% that it recorded in Q1, it's saying that for remaining part of the year, it's seeing a minor growth. But company will strive for maintaining EBITDA margin of last year, that was 24.8%. Also on the channel inventory front, company says it has been increasing in the last few weeks. So overall, numbers were in line to slight beat, but the commentary of the management has spooked the market and led the stock to fall up to 10% in today's trade.
Okay, all right. Thanks a lot for that, Sudarshan. Well, Mayuresh, any view on either of these stocks?
No, so Nigel, I think the commentary is something which is a little bit concerning for the street when it specifically comes to Balkrishna Industries. Volumes expected to be flattish or slightly lower. You're probably seeing demand come down for the tepid volume scenario as far as BKT is forecasting. The second element also is if inventories are probably building up, that does not augur well even for end user prices across the markets that they're probably servicing. And therefore, the expectations in terms of significant amount of earnings beat that could have come through, that probably be missing for this financial year. So yeah, I think there is some element of downgrades that will come through. For Sun TV, again, I think the general consensus that is getting built up is if ad revenue probably remains tepid, which is one of the biggest growth drivers for the sector itself, along with what probably happens outside Tamil Nadu in terms of their regional market share. These two things are going to be extremely critical in terms of their core performance. What happens in terms of their OTT and the movie exhibition business and the investments thereof is something to be seen. The management has in the past guided for a very calibrated approach on this. But again, I think if that leg of the business also does not perform to expectations, I think the overall consolidated numbers might also show some element of downtick. So yes, I think both these numbers have some element of patchy earnings in front of them. So I think remain a little bit wary as far as how earnings growth will play out for both these companies in the near future.
All right, Shilpa, what about you? Where does support lie for either of these two counters?
Sun TV, if you look at, I believe, the support has come in very strongly at around 780. So any declines from here towards 800 zones as well, you can definitely buy. The support is very strong at 780. Eventually, it will take some time, but I believe, again, 845, 860 can come in very quick. And if it sustains those levels, then again, it can move towards 900.
Okay, all right, lady and gentlemen, thank you very much for joining in. Good to have you on the show and get all of that perspective today. Now, of course, we know that the weekend developments around Hindenburg research were in sharp focus, with the Hindenburg casting allegations on SEBI chairperson on counts of potential conflict of interest with regard to the Adani Group. Hindenburg research questioned her credibility in investigating the allegations against the Adani Group. Now, we've been speaking to a lot of market experts and also caught up with the market veteran Madhu Kela on the subject. He says that this event will not be a destabilizing factor for the Indian market at all, and there is no reason to be nervous. He also shared his overall views in the market and some sectors that he still likes. Take a look.
From an investor perspective, because of this event, and I'm very vocal, very clear, I'm not mincing word, I think because of this event, I don't think investors need to worry at all. I don't think this is any event which will destabilize India or destabilize the market, or there is any risk to market because of this event. We have had a tremendous gain in the market in the last 3-4 years. Even at the index level, the CAGR is more than 30%, right? Individual, lot of companies have gone up 1, 3, 5, 10, 20 times from the COVID low. So first thing is, you cannot extrapolate what has happened in the last 3 years, right? When you are even investing for a long term, your return expectation has to be very, very moderate. There is clearly discomfort to even an optimist like me in certain pockets, right? So if you are investing in mutual fund, you do your homework, invest in good mutual funds with a track record, no issues at all. But if you are investing in individual companies, you should definitely be watchful of what you are paying, what you are assuming, and then what is it that the company will deliver, then you make money. We spoke about the liquor sector, which looks like a structural long-term story. So I think there is enough, and someone like me, I am always open to an idea, but I am also not hesitating in this kind of market to sell companies.
All right, well, time to slip into a short break. On the other side, we'll get you all the top corporate voices and the key events to watch for tomorrow's session.
Welcome back. You're with us on Market Forward. Let's take a look at some of the top corporate voices that we heard from during the course of the day. First up, Inox Wind was in focus after a strong quarter. We caught up with the company's management earlier. They say that the company is on track to achieve execution guidance of 800 megawatts in the current financial year and 1,200 megawatts in FY26. They added that the PAT per quarter could potentially double from the current level, as interest costs are anticipated to be minimal going forward.
Staying with earnings then, Bengaluru-based kitchen appliances maker Stovecraft delivered a strong showing in the first quarter. The management said that the overall business is on a positive trajectory with improvement in gross margins. With the festival season approaching, the company is witnessing strong market traction for FY25. Stovecraft anticipates EBITDA growth it to be quite good, and they're guiding for margins of around 11%. Also talking about revenue growth, they say that they will grow in high teens. Additionally, the management targets to open 25 to 30 stores each quarter. Well, staying with corporate voices then, Amara Raja Energy and Mobility has unveiled its gigafactory just outside Hyderabad, set up at an investment of around 9,500 crore rupees. The company will build the battery packs and lithium-ion cells for electric 2- and 3-wheelers. Our colleague Jude Sanat spoke to the management about these developments and what it means for capacity expansion and more. Let's listen in.
The facility we're in today is our pack facility that we've inaugurated the phase 1 of. This facility today houses about 1.5 gigawatt hour of pack manufacturing. And today we have our 2-wheeler and 3-wheeler lines up and running. And eventually this facility will house about 5 gigawatt hour of pack manufacturing. This facility, I think, is largely catered to light electric mobility, which we're very bullish on. We think that the trends of electrification in 2-wheeler and 3-wheeler, they may kind of, they may slow down at times, but mostly we don't believe that these segments are going to go backwards. I think the electrification route is clear. It's unidirectional. We are seeing a lot more, movement on the passenger vehicle side. Little less on the penetration numbers, but definitely we are quite bullish that India will adopt the EV story, especially because I think for our cost points, we're a very value vehicle-minded country, and some of the brands that have come in and been able to crack, that price point and the kind of the features, it's definitely going to go up, and we feel that we're in a good position to capture that.
All right, that was Amara Raja in focus as well today. Before we wrap out, let's talk about some of the key events that we need to look out at tomorrow. Ekta.
Well, yes, I'll start with the earnings tomorrow. We have the likes of Apollo Hospitals, Hero Moto, Hindalco, Dish TV, eClerks, MCure, Ease My Trip, GNFC, Godrej Industries, Ipca Labs, which will be releasing numbers tomorrow. Along with that, we do have First Cry, which will be listing along with Unicommerce as well in tomorrow's trading session. Nifty Financial Services expiry, we have a conference from MK, where a couple of companies such as Lakshmi Organic, Aditya Birla, Sun Life AMC, Adani Port, Godrej Consumer, BSC, all of them will be represented, along with Wipro at the Nuvama India conference. Now, in terms of global data, we have the UK unemployment data, US PPI data, Red Book Index, we have a Fed members speech. From Israel, we have the balance of trade, exports, import data. And internationally, we have the IEA oil market report to look forward to as well.
Thanks a lot for that, Ekta. On that note, we'll wrap up on this edition of Markets Forward. We'll be back with more news and updates on the other side.
The market ends with minor losses after a sharp intraday recovery. Metals, realty, financials led the gains, while FMCG and utilities lagged. Broader market outperformed.
Hindenburg Research flags issues to suggest that the SEBI chief's complicity in the Adani matter and cited this as a reason for SEBI inaction. Adani Group stocks they end the day in the red, but sharply off the day's low.
Jubilant FoodWorks fires up on delivering growth in a weak environment. Voltas climbs on heady sales in the warm summer, but Balkrishna Industries skids on challenges ahead, and Sun TV feels the heat as ad and subscriber numbers dip. This toss to Ekta was really bad. Can you take this again?
Oh, Gabru Tana.
Oh.